Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is October 25th, 2023. This is a Forex quick look at the dollar versus Canada. As the Bank of Canada interest rate decision lies ahead. When you have a key event, you want to know what the bias is, what the targets are, what the risk is, and that's what I'm going to do in this video. Starting off by taking a look at the daily chart. The bias is more to the upside. We're seeing a rotation off of the 61.8% retracement in the month of October. That's just of this last move to the downside from this high going back to March to the low price that we saw in the month of July. The 61.8% retracement held support earlier this month, and we've seen a up and down move to the upside in trading more recently. And today we're seeing an extension to the highs of the month of October, which came in near the 1.3783 level. The high price today is just below that level currently at the moment, and we are trading at 1.37704 off of that level. So we are seeing some sellers leaning against the old high from October. That sounds pretty natural. Sellers leaning against that as risk can be defined and limited, at least as a short-term trade. They may even get out before the interest rate decision coming up. By the way, the central bank is expected to keep rates unchanged for the third consecutive meeting. The hopes are that slower growth leads to slower inflation. Obviously, Canada is very dependent upon rates as far as things like housing and such, so that could slow growth tremendously as those mortgages get repriced. So that's sort of the hope and what the idea is, and perhaps seeing why the Canadian dollar is getting a little bit weaker into that release. We'll see how it all plans out fundamentally. But we also we're moving away from this swing area here between the 136.46, 137.04. Admittedly, that's pretty wide. And we'll take a look at the other levels off the hourly chart in just a second. But it is what defined what was resistance here, and then became support through here, and then became resistance through here. And again, in the month of September, and in this month, we've seen the price move above and below that area. So it's certainly it would take a move below the 137 level. And then 136.46 to increase the bearish bias off the daily chart. Now let's switch our focus to the hourly chart. Remember the 137.04 level down to 46, and if we look at the 100-hour moving average here, that would be a level that if the price were to move below that level, that would increase the bearish bias. So that's just above the 137.04 level, and then we get down to 136.84, which is the 200-hour moving average. In trading yesterday, the price moved below that 200-hour moving average right here, but it was for a relatively short amount of time. And then the market reestablished support against the 200, moved up to the 100-hour moving average right through here before basing and breaking above the 100-hour moving average. So you can see the importance of the 100-hour moving average at 137.13. So if we do get a rotation back to the downside in the U.S. dollar, rise in the Canadian dollar because of, I don't know, some more hawkish comments, watch that 137.13 level on the downside for short-term bias clues. Move below it and then look toward the 200-hour moving average. Once again, same story as yesterday, but those are the levels on the downside that get below, and then we probably, if we get below both of those levels and stay below those levels, then we can talk about the 136.46 level as another target on the downside for this currency pair. On the top side, get above the 137.84 level, and going back to our daily chart, and it opens the door for this swing area up here between 138.07 and 138.59. Again, a wide 50 or so a pip swatch of resistance, but like this move, like this area down here, it is also defined by a number of different swing highs that came within this area, causing a ceiling. We did move above it here in the month of October, but for this year, the high price for the year comes in at 138.61. So getting above that level would be certainly a target to aspire to. on further upside momentum in this currency pair. So there you have a look at the dollar versus Canada. The bias is more to the upside going into the interest rate decision. We'll see if that momentum can continue above the 137.82 level and start to work above the 138 level toward the 138.59 high from 2022. Absent that, we'll be watching 137.13, 14 on the downside. That's where the 100-hour moving average is currently located. Greg Michalowski from Forex Live. Good fortune through trading. Bye-bye now.